Stock debate of the day. The question we're putting to you is this: Nippon Life is likely to raise or will raise its stake in Reliance Capital Asset Management from the existing 26% to 49%. Is it the right time or the right trigger to buy the stock? We've got our market experts, P. Fanisekar and Nipun Mehta, joining us to debate that question. But before we do that, let's go across to Varinder, who has all the details on that development. Varinder, what do we need to know about this?
Well, the news coming in that Nippon will be upping their stake from 26% to 49%. Important to note is that when they bought 26%, they bought at 5,600 crores. But now what price they are paying is nearly 7,300 crores. So there's nearly 1,700 crore more. The value of total asset management is 1,700 crores more. Of course, important is that in the last 2 years, we have seen the markets running up, and hence the total assets under management by Reliance Capital Asset Management has moved higher. Normally, in these kind of businesses, it's a percentage of AUM, the way the deals happen. And quite clearly, if you look at 7,300 crores, it's nearly 6% of the AUM what they are getting right now. So it's a good thing for Reliance Capital Asset Management. And of course, we have been hearing from EDAG that they have been always open in terms of Nippon upping their stake. But not only this, if we just look at the entire company, the market cap of Reliance Capital is nearly 12,000 crores. This is only one part of this company. The second part is Reliance Life Insurance, which is actually the bigger one. And the entire market is waiting what happens to the insurance bill. Nippon currently holds 26% stake in Reliance Life, which was bought for 3,000 crores, hence valuing the entire entity of 11,500 crores. So there's a 23% room which is still available there. If and when that insurance bill gets passed, then you may see Nippon coming up. But again, Nippon has made the intentions very clear that they want to up their stake to 49% when that window opens up. Of course, third leg is the Reliance General Insurance, where that entire 49% stake is there. Again, I'll not be surprised if Nippon only comes away. But market analysts, if you talk to them, they are giving a value of anywhere between 1,500 to 2,000 crore for Reliance General Insurance. So if you club all three businesses or entities together, the SOTV's sum of the part valuation is nearly 20,000 crores for a company who's trading around 12,000 crores. If you look at Max India, Reliance Capital has clearly underperformed year to date. Max India stock is up 65%, while Reliance Capital is up only 32%. But for the day, it's a good news which is coming up, where the valuations are higher compared to what it was done. And now for Reliance Capital Asset Management deal is done, all eyes are only set to Reliance Life Insurance if and when it happens.
All right, Varinder, thanks very much for that. Let's take all that information to our market experts, P. Fanisekar and Nipun Mehta, to debate on whether these are good triggers to buy into the stock. Nipun, what did you make of the 6% of AUM valuation, how that compares with other deals in the past, and therefore this enhanced investment by Nippon being a good trigger to buy into the stock?
Well, for one, yes, it sets a benchmark on the valuations on the asset management industry. So 6% is a very decent benchmark that is there on whatever assets close to about 120, 130 lakh crores that or 120, 30,000 crores that Reliance Asset Management is managing. So that sends a decent benchmark. Please remember, a good part of that is liquid or debt assets, which obviously need not be valued at that high. Relatively, in comparison, lower percentage of the assets are equity assets. So that's a good benchmark that's been set. Also, all this money actually comes into Reliance, the asset management company, which is not necessarily a capital intensive business. But at the same time, if you look at the results of Reliance Capital, it's probably one of the largest contributors in terms of profit before tax amongst all the other businesses. It doesn't contribute, it's just about 8 to 9% of the overall Reliance RCAP consolidated revenues, but in terms of profitability, it constitutes close to about 30 to 35% of the profit before tax. So it's a significant contributor to RCAP's overall profitability. When you look at the potential, again, from what I understand, this increases from 26% to 35%, and still 14% is something which Nippon Life can further take into the asset management company. This is not straight 26 to 49%.
Yeah, this is the first tranche.
So this is the first tranche. So the further tranche of disinvestment or sale or increase in stake by Nippon Life, if that comes by, could also be a significant capital infusion that could come about into the asset management company. So overall, overall, when you look at the cash strength of the entire group, significantly strengthened. Return on assets can be improved further on. And when you look at the sum of parts, when you look at the asset management business, the general insurance business, as well as the third leg, which is the regular lending business that is there. The other businesses are in comparison small. When you look at the securities business or the private clients business, the wealth business that is there, that's relatively small. But when you look at the lending business, so these three business obviously make the comparison or make the company relatively strong fundamentally. Yes, so at these valuations of close to about 12,000 crores, the stock does appear reasonably attractive.
Funny, what's your call on Reliance Capital? Because it's been one of the underperformers. This year it's up 38%, but if you compare it from the last 2 to 3 years, from its heydays, it's really been a rank underperformer.
Hi, good afternoon, Anuj. I am positive on Reliance Capital. I was positive before this news about this deal, and this deal has just made my conviction even stronger. Yes, it is true that it has underperformed, but that story is the same for all financial services stocks, except for maybe a section of banks and NBFCs, because the economy was challenging for the last 4 years. A large part of Reliance Capital's value is derived by the insurance business, over which it is doing well, and FDI insurance is a major trigger. If that happens, expect more re-rating out there. It is emerging as a major player in commercial loans business as well. So whether it is mortgages or loan against property, Reliance Capital is registering its presence in the industry. And it has two very strong market-linked businesses, which is the mutual fund and the securities business, which are directly linked to the fortunes of the market, which to a large extent was responsible for its underperformance over the last 3 to 4 years. Now with enhanced valuation benchmarks for the mutual fund business, I think it will make valuation re-rating much more easier from here. The fact that it is still trading at close to book value, although return on equity is lower, understandably so, because many of these businesses require value unlocking, and we are getting reasonable and reliable benchmarks. The fact that it is trading at book value makes the stock very attractive. I am looking at a 45 to 50% upside in 15 to 18 months' time. That's the minimum I expect from the stock.
Okay, Nipun, what's your price target on Reliance Capital?
Well, I think from a price of about 500, I would presume there should be at least a 20% upside as far as the stock is concerned over the next 12 months or so.
You don't expect this overhang of MSCI, MSCI removing it from its index. That's why we saw quite a bit of selling also yesterday. That having any kind of impact? Well,
after this kind of infusion, if the company becomes stronger, yes, that overhang does remain. But yeah, if that does happen, yes, there could be a bit of selling, that institutional selling that could come about. But our sense is there could be significant domestic buying that could happen based on these kind of strengths that this kind of disinvestment really generates for a stock like RCap.
All right, gentlemen, we'll leave the Reliance Capital conversation there.